Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio. It's been a while since our last episode, but we have some excellent content in store for you over the next few weeks. Longtime listeners of Options Insider Radio will remember that we flew out to the Options Industry Conference in Las Vegas last year. We recorded a series of live interviews at the conference, which turned out to be a big hit with our listeners. So we decided to do it again, but this year we wanted to up the ante even further. So not only do we have a series of interviews in store for you with some of the leading names in the options business, but the Options Insider was also the exclusive audio sponsor of the 2009 Options Industry Conference. That means that in addition to the interviews, we're also going to have all of the panel audio from the conference available on the optionsinsider.com. So if you couldn't make it down to Florida this year, or if you missed a panel, or if you just want to see what all the fuss is about, you can find it all right here over the next few weeks. There's quite a few episodes coming your way over the next few days, so sit back, relax, and enjoy our exclusive audio content from the 2009 Options Industry Conference.
Well, hello out there. Welcome to the 27th Annual Options Industry Conference. We instituted this program a number of years ago where we give the chance for the committees to update the audience on what's new, what's happening within their individual committees, as well as give the exchange business representatives a chance to tell the attendees and participants what their plans are forward-looking for the remainder of the year. We have one change in the lineup. Rory O'Kane, who is co-chair of the STA Options Committee, is going to kick it off and lead off. I know Rory has a plane to catch, so he's going to be has to be moved up the ladder here. So with that, Rory, please come up.
Thank you, Alan. And I don't think I'll need 10 or 15 minutes, which they allotted me for. Our committee doesn't have the rich institutional history that many of you have yet, but I want to thank the Boston Options Exchange and OIC for allowing me time to recap the efforts of this past year and our focus for the future. Before that, for those of you that are not aware, I'll give you a little history of STA, the Security Traders Association. It was formed at a pivotal time in our country's financial history, much like today's, 1934. And STA encompasses over 5,500 members and 26 affiliates across the U.S., Canada, London, and Paris. A handful of committees function throughout the year to help guide the national board in regards to trading issues, regulation, legislative outreach, and charity. The STA Options Committee was formed last year as a subcommittee of the trading issues. STA identified a long overdue need to enter that space and have more content being driven up to the national level. And particularly they noticed the success we had in Chicago, because a lot of our strength and our growth has come from the options and futures trading industry. David Mortimer and myself are co-chairs, and we have at present 44 members, 16 sell-side, 6 buy-side, 4 exchange reps, 3 market makers, 2 technology reps, 5 portfolio manager, asset management types, 2 electronic brokerage, and 3 unemployed, and hopefully that classification doesn't continue to grow. With such a diverse makeup, 08's focus was fairly broad, but mirrored many of the issues confronting the SIFMA Options Committee and other well-regarded industry committees in this space. We conducted 8 meetings in 08. We kicked it off in March with an analyst from Fox Pitt Kelton, who basically went over market structure. Most of the people on our committee don't have the expertise and experience that most of you out here have. And then went into talking about the publicly traded firms that are option-centric, like your Thinkorswims, Option Express, Interactive Brokers. We also had meetings, obviously, on the emergency short sale issues, over-the-counter options trading versus exchange-listed trading, the pros and cons, transparency and lack of thereby. Each exchange had presentations that we went over with different products and integration efforts and their models per se. So far in 2009, we've conducted 3 meetings. The first one with Elizabeth King, Commissioner, SEC, who gave us an update on pennies, short selling, and interlinkage in February. In March, we had a meeting on algorithms and their evolution in the option space, and Credit Suisse and Bloomberg were part of that one. We had our third one yesterday, which was very well received. It was basically the CBOE2, C2, and the NYSE and the Amex update and integrations to date. So ongoing for 2009, we'd look at focusing on transaction cost analysis and best execution for our group. We think that's going to be a more increased importance in this fragmented market that we have. Option symbology initiative, obviously, as we move closer to 2010, and more technology pieces, dark pools, algos, and such. And we're going to revisit the utilities of over-the-counter option trading again with the listed exchanges, and particularly as some of these exchanges have products and like CBOE's CFlex that could help in that space and make it more transparent. Of course, interspersed all throughout the year is regulation and its impact on the option participants. STA looks upon the committee for incisive and informative input to help it formulate its message to Washington through comment letters and the Traders Advocate, which is on our website, securitytraders.org. So I don't believe, I think 2009 is shaping up to be as interesting as our beginning in 2008, and I don't believe we'll run out of any content anytime soon. But that's our update, and thank you. And next up is Joe Corrigan.
My name is Joe Corrigan. I'm the Executive Director of the Options Price Reporting Authority, which is the consolidated source of options, quotes, and last sales. Currently, there are 7 exchanges that are part of OPRA. CBOE is starting a new exchange called C2, and that will be part of OPRA when they start trading, which I think is going to be the third quarter of this year. And if you believe the trade publications, there are more exchanges joining OPRA or getting into business too. Thought I'd give you a couple of facts and figures. I mean, our claim to fame and our reason for being is to collect quotes and last sales. We measure our activity in messages per second. In the first quarter of 2008, we projected our traffic load would be 800,000 messages per second, and of that, our peak was 406,000 messages a second. First quarter of 2009, the projections doubled to almost 1.5 million, and last Tuesday, we set an all-time record of 761,000 messages per second, and the bulk of those are quotes. The projections for January of 2010 are 2.5 million messages. Right now, our computer capacity is 2.5 million. So over the next 6 to 9 months, SIAC, the OPRA processor, will be increasing our capacity to, we currently project that we'll achieve 5 million messages a second in early 2010. We measure system performance by latency, and currently our system latency average is under 3 milliseconds. Our output from SIAC last year, 2008, we implemented a FAST, which is a data compaction protocol. This has resulted in a 70% reduction in the required bandwidth for vendors and data recipients who receive OPRA data. And on the input side, in 2009, we will be implementing the same type of technology or data compaction for the exchange input to OPRA, and we expect similar reduction in network requirement. As everyone else is doing, we are changing our symbology in conjunction with OCC's Options Symbology Initiative, and we are on schedule for a February 2010 deadline to convert our symbology format to the new format. That is the extent of my presentation. I'm introducing the next speaker, Pete Armstrong, to talk about the Options Linkage Authority.
Thank you, Joe. Good afternoon, everyone. I'm hoping that this is, once again, as I said last year, I'm hoping this is the last time there's a linkage presentation at this conference, and I hope we don't make one in September at the FIA Fall Conference in New York. The reason for that is that we're planning and have filed with the SEC a new national market system plan, which we call distributed linkage. It's based on the Reg NMS structure used in equities. It involves using intermarket sweep orders and private routing rather than a centralized linkage hub. The exchanges agreed on a plan finally late last year. We filed. It was noticed for comment at the end of March. The comment period is closed. There were no comments submitted. We're awaiting approval by the Securities and Exchange Commission. It has to go, as a new NMS plan, it has to go to the full commission. It's not something that can be acted upon by staff. Each of the exchanges has submitted draft rules to implement the new linkage plan. Those are awaiting a green light from commission staff to formally file. At that point, they'll go out for notice and comment. They're pretty straightforward rule sets, and they'll be uniform across the exchanges. We expect all the exchanges to be ready to convert pending regulatory approval at the end of July. And right now we're targeting an implementation date of either July 31st or sometime early in August. So we're hoping that by Labor Day, there's no more options linkage. And with that, I'll turn it over to our next speaker, Joanna Field.
Good afternoon, everybody. My name is Joanna Fields. I'm the chairman of the Options Trading Committee for SIFMA. It is truly a pleasure to be here. I just wanted to take a moment to thank OIC and the Boston Options Exchange for giving me the opportunity to update everybody with some of my agenda and undertakings for this year. But first, I'd like to start with a little background with regards to the Options Trading Committee with SIFMA. This committee is made up of retail firms, institutional houses, market makers, flow providers, and some firms that have pretty much everything that I've just listed in some capacity or another. I'm the current chairman, and Pete Bottini from Options Express is my vice chair. Tom Price is our new SIFMA staff advisor, so everybody in this room should feel free to reach out to him to get more information with regards to the committee. There are 3 subgroups within the Options Trading Committee. They are risk, market structure, and electronic execution platforms. Our agenda for this year is quite extensive, so if you'll bear with me, I'll run through it. SIFMA is working on the OCC and OIC, with the OCC and OIC on the Option Symbology Initiative. We are providing guidance and testing and trying to help where we can. I'm also happy to announce that our best execution methodology has been rolled out by the PHLX, and we expect the other exchanges to roll out by the end of second quarter. This has been a successful initiative combining the 7 exchanges, the SEC, and the industry. The committee has reached out and is currently working with the 7 exchanges on several other projects, including erroneous trades, developing a cohesive listing and delisting program for option strikes, vetting the much-anticipated Reg NMS for options. Options white paper is another project that we're currently working on, which has the goal of comparing listed options markets and equity platforms. And last but not least, our market structure committee is particularly busy. Penny pilots, maker-taker fees, mutual recognition, electronic trading screens, and dark pools for options. In addition, my committee is also working with other committees at SIFMA. We're currently working on, with the Equities Committee, the opening and closing to be consistent across listed options and stock underlyings. We're also working on an erroneous quote for tied option orders or contingent orders, buy rights, for example. In addition, we're working on the FINRA's front-running proposal with the Derivatives Committee of SIFMA. And probably what would not come as a surprise to anybody in this room, we are working on the reg show or the short sale proposal that was recently released. In conclusion, I want to thank Alan Grigoletto for organizing this very thought-provoking conference and for everybody on my committee for their tireless contributions to my extensive agenda. It is my honor to introduce Marie Savoy from the Options Industry Council. Thank you.
Good afternoon. I'd like to thank the Boston Options Exchange for organizing the conference and for this opportunity to update you on the recent activities of the Options Industry Council. I think we can all agree that 2009 is a very unique year. It's been a very rough financial environment, and yet options are showing resilience as a versatile product that can be helpful in any market environment. OIC believes that education and marketing is most critical during difficult times, and in fact, it was founded upon this notion. Some of you in the room may recall that OIC was created in 1992 to help rebuild the options markets after the 1987 crash because they had not fully recovered at that point yet. So this year, we feel extremely fortunate to be expanding our programs thanks to industry support. Today, I'd like to share with you some of the progress we've made towards this expansion. Now, key to the expansion was building our marketing staff, and recently we hired 3 full-time consultants to join the OIC team. Joe Burgoyne, who focuses on both retail and institutional communities, Eric Kott, who is solely focused on financial advisors, and Gary Delaney, who supports our European program. All 3 of these men take a very leveraged approach to promoting the benefits of exchange-listed options, and they do this by building relationships with brokerage firms, advisors, fund managers, other financial intermediaries, industry associations, and also academic institutions. And in doing so, they spend an awful lot of time out in the field. And what they're finding is that this challenging market environment, in fact, is a great opportunity to tout the benefits of exchange-listed options. It's apparent that investors are seeking information on new ways to manage risk, that financial advisors are more open to new strategies in an environment where asset diversification alone clearly hasn't been adequate. And institutional investors are expressing more interest in the transparency and the AAA-rated clearing of exchange-listed markets. Now, the cornerstone of our expansion is the Financial Advisor Program, and we have 3 new components now in play towards that effort. We've got a new dedicated resource, a website, and also an advertising campaign, all focused on financial advisors. I'd mentioned earlier that Eric Kott has joined the OIC team. He manages the financial advisor education and marketing programs, and he's actually at the conference. He's somewhere out there. It's hard for me to see with the lights. But if anyone's interested in more information on our financial advisor programs, I encourage you to seek him out. We, about a month ago, launched a website, a brand new website designed specifically for financial advisors. It's at www.optionseducation.org/advisor. And most of the content lies behind a secure login, and it includes things like trading tools, best practices, and success stories, all from the perspective of an advisor. And this website is supported by a national advertising campaign in both print and online, and I realize there we go. So the slide before that was showing the actual website, the new website, and here's samples of the advertising campaign. And the purpose of the campaign was to raise the visibility of options among financial advisors and to also communicate their relevance. And the underlying message that we want to tell them is that options can help you become a better financial advisor. On the screen, we have samples, banner ads, and print ads, and the campaign personifies options as a very powerful and flexible financial tool, but one that's often forgotten in the advisor community. Hopefully you can read those. And while we're on the topic of advertising, our retail campaign is still performing very, very well. It was new last year. It's driving efficient responses, and we're very, very proud of the fact that it has recently received top honors from the Journal of Financial Advertising and Marketing, and it's also a finalist for the Financial Communication Society Awards, which will be held in about 2 weeks. So we're very proud of that. Advertising is certainly one factor that has contributed to the growing traffic on our website, and our main website is optionseducation.org. Just last month, we set a new record for website visits and also podcast downloads. And while ads can certainly drive investors to the site, and they do, we know that it's our robust content and new offerings that keeps them coming back. We're really excited about a new offering, and I'm getting ahead of these slides here. Example of our award-winning ad campaign. And that is an e-learning system. We're in the process of rolling it out. It's accessible right now from our website. And this is the first installment of an enhanced e-learning platform. It's going to be a multi-year project. It supports the customization of the learning path by the user and then allows the user to track their progress along that path. So we're very excited about that, and we hope that you have a chance to go check it out. While the convenience and the flexibility of online education certainly has broad appeal, and we see that, we also know that some investors prefer live education. Our newest live offerings have been very popular. We recently added a volatility class to our evening seminar program, and we seem to be benefiting from the timeliness of this topic. It's been very well attended. Also, we've increased the number of investor education days that we do. These are full-day programs targeting the individual investor, and we just held one last month in Orange County. It was unique in two respects. It's the first time we conducted this program and hosted it independently without a partner, and it was also the first time held on a Saturday. It was very well received. It was fully subscribed with about 300 attendees. And due to the success of past events with the Montreal Exchange, we have increased our participation in the Options Education Days that they host as well. And we're now presenting programs in 5 cities across Canada. But we're also building our presence beyond North America. As I had mentioned earlier, we hired a full-time resource, Gary Delaney, who is in London, and he's helping Otto Nagle broaden our reach in Europe. Also, over the last 6 months, we've established new partnerships with other markets, with NASDAQ Dubai, with the Tokyo Stock Exchange, and also with the Warsaw Stock Exchange. And we continue to talk to other interested markets. Earlier this year, OIC participated in a 3-city roadshow in Japan with the Tokyo Stock Exchange. These activities that I've talked about this afternoon are just some of the things that we're working on, and they're already generating positive results. They reinforce OIC's view that the current market environment really provides a tremendous opportunity to promote the benefits of exchange-listed options. Thanks to the industry support, OIC is well positioned to make the most of this opportunity. So I want to thank you, and now I'd like to introduce Susan Milligan, who has 2 roles. She's Executive Director of OIC, and she's also Senior Vice President, Government Relations and Communications at OCC. Thank you.
Thanks, Mary, and thanks to Box for sponsoring the conference this year and for giving me an opportunity to talk a little bit about what we're doing in Washington. As Mary said, I'm the Senior Vice President, Government Relations and Communications at the Options Clearing Corporation. I have working with me in Washington 2 colleagues, Bradley Edgell and Ted Dahlstrom. They're both former Hill staffers, so they help to leverage our activities there through their very robust relationships. We work both on behalf of OCC and also on behalf of the Options Exchange Coalition when there is an issue of common interest and where we have a common view. The Options Exchange Coalition consists of OCC and our U.S. options exchanges. We've been focusing this year on 2 topics, short sale regulation and regulatory restructuring. On short sale regulation, as you know, the Commission recently put out for comment a proposal to amend Reg Show to put into place further regulation of short sales. That was on April 8th. The Commission, at that open meeting, there wasn't a lot of enthusiasm on the Commission for the proposals, but there was, I think, a real need by the Commission to take another look at short sale regulation. They've heard from a lot of investors. they've heard from listed companies, they've heard from members of Congress that the events of last fall and some of the precipitous declines in stocks must have had to have been related to the fact that there's no uptick rule anymore. So I think that the Commission quite prudently decided that it needed to take a look at that area and take some comment. They're also going to be looking at economic advice as well as comment letters. And in fact, next week they're going to do a roundtable on short sale regulation where they're going to hear from a range of market participants on a range of issues, uptick rule versus bid versus a circuit breaker. What does the economic analysis show us? What does customer perception show us? So I think that they're involved in a process that's going to be very deliberative, and they're going to be looking for information from a variety of sources. The Options Exchange Coalition is discussing whether to do a comment letter. If we do, it will focus on what the impact on option market makers would be of the proposals that the Commission has made, and would focus on how we can make sure that option market makers under any of the proposals can continue to provide the very important role that they have in our markets. Our other issue that we've been taking a look at is regulatory restructuring. And in this area, we don't really have a point of view. We've been just providing a lot of information to our options exchanges. Regulatory restructuring that Congress is looking at right now falls broadly into three pieces. One is resolution authority. That is, how could we wind down an entity that is a non-bank, that is large and systemically critical? If you look at what happened with Lehman and AIG, there's been a lot of testimony on the Hill that some of the reason that we're involved as taxpayers there is there was really no good way to wind down the operations of those companies. So there's a look at how can we add a regime to resolve entities like that. The second thing that Congress is looking at is a systemic risk regulator. There's been a lot of testimony on the Hill that a number of the regulators that were involved last fall just saw one piece of the action, that there was really nobody that had the overall view of what was happening and no way to anticipate possible problems and offer possible solutions to the day-to-day regulators or in concert with the day-to-day regulators. And the third piece is really regulatory restructuring, taking a look at our regulatory system, many parts of which have been in place since right after the Great Depression, and determining if there's a way to update them, to make them work better with the markets that we have today. Up till last week, I would have told you that I thought that those three projects were going to move independently. But this week, Chairman Barney Frank of the House Financial Services Committee said that he plans to just do one bill, find a way to come together with legislation on all three of these pieces at once. And that puts him in concert with Senate Banking Committee Chairman Chris Dodd, who's long said that he just wants one bill this year. Our role in Washington at the OCC is to monitor hearings, monitor what's going on in the Hill, and share that information with the exchanges so they can use that to make decisions on their own stands on these issues and to help inform their participants. Next, I'm going to turn it over to Carolyn Mitchell. Carolyn is the first VP, Business Development at OCC.
Thank you, Susan. OCC has had a very busy 12 months. As you can probably guess, the financial crisis has kept our risk and our operations departments very busy. And in addition, we have a number of projects and initiatives that I'm going to talk to you about today. I'd like to start, though, with volume. This is a slide of the last 5 years of options volume. Those of you in the industry who are all sitting here, this is a great picture. It's a great story. Many industries would love to have a chart that looks like this. And in fact, if we were to spread this out even over the last 10 years, you would see a similar growth. Let's look at 2008 and just focus on what happened last year. We were up 25% over the previous year, and we traded 3.6 billion contracts. Now, the 3.6 billion contracts we traded last year is equal to our total volume in the first 24 years of the options industry. That's a pretty amazing statistic, and it is going to be on the quiz at the end, so write that down. Another interesting point to note about 08 is recently our board of directors approved another record clearing fee refund to our clearing members of $65 million. I know many of you in the room appreciate that fact. But when you look at this, you almost think that our industry was somehow resilient to this financial crisis. So I wanted to break the volume down a little bit so we can analyze that a little bit further. This is a really interesting chart. So you see from September to October, we are actually up 52% over the prior year. Volatility gave us all a wild ride. Also interesting to note, in October, OCC margin held at OCC peaked to $116 billion. Compare that to $31 billion in January. Then you see what happened in November and continued through January. We had a 20% decrease. This upward trend that we are all very used to suddenly went the other way. Interesting to note about November, our clearing fund peaked to $6 billion. Again, compare that to $3 billion in January. Finally, in February and through March, we're starting to see the volume trend back up. We're happy about this, but we know that we still have a tough year ahead of us. And in fact, in March, we were up 27% over the prior year. So if you're interested in volume statistics such as this, you can get all of this at OCC's website. You can sign up for broadcast emails and do queries. So I invite you to come to our website and check it out. And that is a great segue into my next slide. You guys are getting a sneak peek at a new website we'll be launching in the end of August. And this website, in addition to having improved usability and navigation, also will give more focused content on risk management, clearing, and membership. In addition, we're going to improve some of our volume queries and ways for you to get information. Okay, so the fun stuff. We're going to jump into the new business initiatives and the new projects that we're working on. And we should start with futures, because for OCC, this has been a big year for us. We've done a lot to expand our futures clearing services. To start with, we're now clearing futures and options on futures metal products for the New York Stock Exchange Life. We started clearing for them at the end of March. Later this year, we'll be clearing for a new exchange, ELX, U.S. Treasury futures. And to support these two new markets and these new exchanges, we've also made several enhancements to our systems. So we've made our give-up and allocation processing more robust. We've accounted for 22-hour trading and clearing now. And we're also building a physical delivery module. After futures is AQS. AQS is a new security lending marketplace owned by QuadraServe, and OCC was selected to be the clearing organization for that marketplace. AQS started in January. They're in a pilot phase with limited participants. Symbology. I think everybody here probably knows everything about symbology, so I'm not going to go into detail, but I will focus on some upcoming key dates. All test scripts are now live on our website. And then in May, which is next week, we're starting pre-certification testing. And that will continue through September when the scripted industry testing kicks off. And that will include consolidation and conversion testing. And then the big day is still set for February 12th of 2010 when Symbology is scheduled to go live. Also going live on February 12th is Phase 2 of SOSA. For those of you who aren't familiar, SOSA is the Streamlined Options Series Ads project, and Phase 2 is the automated generation of new series. So exchanges will input rules that will automatically generate the series. In June, we're starting testing with the exchanges, and then this will go live with Symbology. The next one, ISRA, is maybe a new term for many of you here. It stands for the Intermarket Symbol Reservation Authority. And ISRA is going to be a processor for reserving security symbols. OCC was recently selected to be the processor and build out this system. We're currently set to start doing this on May 1st. And when this launches, exchanges and FINRA, I believe there's 11 exchanges in FINRA, will be able to come into one spot through our portal and reserve symbols. Just in preparing for this, we already have about 6,000 symbols that are being reserved. And finally, there's LOPR. Probably you've heard of this before, the Large Option Position Report. And OCC was selected to rewrite the LOPR system and to act as the processor. We're currently building the system, and we expect to implement this in January of 2010. If you have any questions for me, I will be here through Sunday, and you can also contact me at the information listed on the screen. You'll also see the optionsclearing.com website, which you can go to for more information on volume or OCC in general. And with that, I'm going to ask Alan Grigoletto from the Boston Options Exchange to come back up and talk about BOX.
Well, we seem to be flying through these presentations fairly quickly here, so I'm sure we'll come in well under the deadline. Just a little bit about me. I'm the Senior Vice President of Business Development and Marketing for BOX, and it's our pleasure this year to host this industry conference. I think many of you probably coming out of the financial crisis in the fall were wondering whether we would in fact be able to host this conference this year, and I can tell you that it was never really in doubt, that we had put together a very strong team, which I'll save the introductions to Will Easley tomorrow and talk about our wonderful team that helped put together the conference. But I want to thank everybody in this audience, the sponsors and the exhibitors. It's a testimony to every single person in this room and their hard work in maintaining our business and growing our industry. You all deserve a warm hand, if you wouldn't mind. We're just really proud to have the 27th Industry Conference go uninterrupted. We didn't want to have a gap in the year. I'd like to just talk in bullet points about what's happening at BOX. Most recently, Toronto, which purchased Montreal, and also purchased 22% interest from the Boston Stock Exchange, now has a 53% ownership. So the TMX Group has a 53% ownership in BOX. Most recently, there was a press release, and our protocol, which is the Sales Solar Protocol, licensed from Montreal, will now be licensed to EDX LSE, which is the European Derivatives Exchange, as well as to Borsa Italiano and the Oslo Bourse. What does that mean for BOX? Well, it makes my sales job a lot easier, because now when I speak to market makers and proprietary traders who want to write to our protocol, they not only get one exchange, but they get all of the above. And it's a very minor twist on the protocol to be able to adapt to any of those exchanges. We are also on track, as Caroline was talking about, to meet the Symbology initiative. I think we're ahead of schedule, and we should have no problem meeting the deadline. A little bit about third-party routing, which is our acronym for what is the decentralized linkage. We are on track to replace the current OLA hub. BOX is going to use 2 third-party routers to do that service for us, Interactive Brokers and Goldman Sachs Ready. We're well along on the path of working out the details and should be able to make the deadline. I understand the deadline may slip a little bit, but we should be able to make that deadline with no problem. That delivery date is currently scheduled for July of this year. Another initiative that's underway is a possible data center move. We're currently at the Newark, New Jersey Level 3 facility. And as everyone knows in this industry, power and capacity are really, really difficult to find. And in order to have good co-location facilities, we're going to make a move probably before the end of this year to allow all of our participants to be able to co-locate if they so desire. That delivery date is for fourth quarter. We have a couple of new auctions that are coming on board at Box. One is a solicitation mechanism and a block auction. Blocks will provide liquidity and price improvement to seekers. Liquidity and price improvement seekers to enter one-sided order with neither a professional or customer guarantee on the other side. And solicitation will provide seekers to execute contracts of 500 lots or greater against the contra order that it solicited. And we hope to have that on board within third, fourth quarter of this year. Most recently, we changed our PIP, which is our price improvement mechanism, to be able to start at MBBO. And as you might recall, for those who are familiar with PIP, in the past it always had to begin at 1 penny better than MBBO. We've also reduced the time of the auction from 3 seconds to 1 second. Another initiative that Joanna Fields spoke of is the SIFMA best execution statistics, which we are now in the final stages of verification. And we hope to have that up on our website as early as this coming month, May, or at the latest in June. Finally, we're working on an initiative to provide spread trading at Box, complex order book. We should have that delivered no later than first quarter of 2010. That's all I have for you today. I know that was quick. It is now my honor to introduce David Gray, who is the head of business development, CBOE, New York. Thank you.
Thank you, Alan. And on behalf of the CBOE, I'm pleased to join my colleagues and all of you here this afternoon. Very briefly, I'd like to provide an update on the CBOE, highlighting 5 key areas. Year-to-date trading volume, our proposed demutualization, our latest systems developments, new product innovation, and industry advocacy. Through last week, CBOE's year-to-date average daily volume of 4.6 million contracts was actually outpacing last year. This has certainly been a pleasant surprise to us, given the difficult business environment that we're all in. Coupled with the fact that we're coming off 5 consecutive years of record volume, it's certainly an amazing time. Total exchange volume at CBOE was down in January, but up during February and March, as Carolyn's slide actually noted, as both posted over year-to-year gains. In fact, March was the busiest March ever at CBOE. Among our product lines, we're experiencing the largest volume gains in equity options, where the first quarter volume was actually up 5% over 2008. Demutualization. Every year it seems like it's my pleasure to give you this demutualization update, so here we go again. The key remaining open issue pertaining to our demutualization has been the resolution of our exercise rights, in which certain former Board of Trade members claimed that they were entitled to participate in CBOE's demutualization. After lengthy negotiations and litigation in Delaware, a settlement agreement was reached that allows certain persons who claim to be CBOT members a level of participation in the CBOE's proposed demutualization. Since December, CBOE has been awaiting a ruling from the Delaware court on whether it will approve this settlement agreement. The court has provided no indication up to this point of when this will occur. Obviously, for us to demutualize, for CBOE's demutualization to become final, it also must be approved by our membership. On the systems front, the systems trading front, we have several enhancements that have been added to our hybrid trading platform in 2008 and into 2009. Last year, the exchange introduced a new rollout process that allows for faster openings while simultaneously seeking out the best prices available. CBOE also launched a new order handling service which enables faster and more efficient order handling by incorporating both trading and order handling on the same platform. In December, we added our OEX index options to the hybrid platform, enabling multiple competing quotes and high-speed electronic order executions in the index environment. Additionally, CBOE and the CBSX Stock Exchange were the first marketplaces to begin offering fully automated, simultaneous executions for combined options and stock trades on the same electronic platform. Looking ahead, a major technology initiative for the exchange this year will be the launch of C2, our new electronic options marketplace that will have the capability to support the trading of all of the CBOE's products. C2's primary data center is located in the New York metropolitan area and will operate under a separate exchange license and access structure. C2 will also have its own rules, connectivity, systems architecture, and fee schedule. The exchange's application and proposed rules for C2 have been filed with the SEC, and the comment period has since expired. C2 will be linkage dependent and thus will not commence operations until after the new industry linkage is in place. Its market model is still under development, and we'll announce that plan once it's complete, later perhaps this summer. On the product front, there were several significant new products developed at CBOE throughout the year that I'd briefly like to highlight before moving on to what's currently incubating in our research and product development area. CBOE has become known as the home for volatility, both measuring it and trading it, and continues to define the volatility space. We recently expanded our suite of volatility products into new sectors with the introduction of 3 benchmarks that track commodity-based ETFs and currencies: the CBOE Crude Oil Volatility Index, the CBOE Volatility Index, Gold Volatility Index, and the CBOE Euro Currency Volatility Index. Last month, new mini VIX futures, a contract 1/10 the size of the standard VIX contracts, began trading at our futures arm, the CFE. Presently, CBOE now disseminates data on 12 benchmark indexes and strategies and offers 3 different volatility options and 6 different volatility futures for trading. Other noteworthy new products launched last year included options on the Spider Gold Trust and trading of binary options on 2 of the most widely followed indexes in the world, the SPX and the VIX. Looking ahead, we're exploring new products in the credit and volatility arenas, 2 markets that present potential growth opportunities. Additionally, CBOE has recently eliminated the flex blackout dates and is preparing, subject to regulatory approval, to allow for pre-facilitation hedging. Both of these initiatives aim to replicate in an exchange environment certain aspects of OTC trading, catering to institutional market participants. We're also looking forward to expanding our binary complex, as well as creating new dividend index options. Those dividend index options will be on the S&P 500, and I believe the binary complex that we're starting to create will be on the U.S. home price binary options. Industry advocacy. Before I conclude, I'd like to touch on the CBOE's efforts in Washington, along with certainly Susan's efforts. We've been advocating and active in that environment. The exchange is dedicated to helping shape and grow the options marketplace, and as the industry's leading advocate, represents the interests of customers on a broad spectrum of issues. There are a host of issues before the industry now: the penny pilot, industry linkage, dollar strikes, the symbology initiative, and portfolio margining. But clearly, the ongoing dialogue on regulatory reform is of vital importance to all of us. To us, one of the most critical components of this discussion is the short sale rule. Short selling is essential to smooth, efficient functioning markets. CBOE supports a comprehensive, deliberate approach to curbing abusive short selling. This is an issue that impacts all markets and investors. The role that the options market makers play in our marketplace and within our capital markets cannot be underscored. They need the necessary exemptions to perform these roles as efficiently as possible. Going forward, CBOE will be committed to working closely with the SEC and other regulatory and legislative authorities in Washington on this issue. One last note: in January, our chairman and CEO, Bill Brodsky, began serving a 2-year term as the World Federation of Exchanges chairman, an organization representing more than 50 global exchanges. Bill was the first head of a derivatives exchange to ever be elected to this position. Under his stewardship, the WFE plans an active role in helping shape global financial policy. Having Bill serve in this capacity during this unprecedented time in the history of financial markets, we think will serve the U.S. options industry, its participants, and all of our customers very well. Thank you again for your time. And my competitor, Boris, from the ISE, he's managing director, has asked me to say that in his honor, I will introduce him, and in my honor, I will introduce him.
Hi, everyone. First, I just want to say that it's just amazing to see the number of people in this room, knowing that there are that many fewer people out by the pool. I also want to, even though it's just the start of the conference, I really do want to also sort of congratulate in a way Alan and the rest of the Box team. I know how hard they worked to get the word out, and it was just incredible to see the number of attendees that finally signed up and the number of people that are already here. I think it really says something about the health of our industry and really bodes well for our future. I'm going to cover just a few items about the ISE. Obviously, the most significant thing that I wanted to mention was our pricing announcement that we made earlier in the week. We eliminated fees on ETF options and all multiply listed index options. We really believe it was the right time for us to make this move. It simplifies our fee schedule, makes it a lot easier for our members and their clients, we certainly hope that it makes a statement in support of our market structure and allows our members and recognizes the financial difficulties of the industry and supports things moving forward. On the subject of the penny pilot, I've said this before in many committee meetings. I've said this to many of you in other situations. We continue to support the original proposal that we put out to the SEC. We continue working with the SEC, and we propose a structure where all options under $1 trade in pennies. They trade in nickels between $1 and $3 and nickels above $3. We continue to speak with the SEC. We hope that's the way to move forward. We certainly hope that we reach a consensus with our members, the other exchanges, and that that's the direction the industry moves to. On the product side, we continue to market our FX options and our proprietary index products. Of particular effort is our work on the regulatory side in launching options on a U.S. dollar-based index, a leveraged basket that measures the U.S. dollar against 6 other major world currencies. We're also in a regulatory process to get options listed on the DAX and the Eurostoxx 50 benchmarks. We're continuing work on our Eurex Link project. This is a clearing link that will allow European customers, members of Eurex, and clearing customers of Eurex Clearing to access U.S. markets more efficiently. We hope to launch that sometime in the third or fourth quarter of this year. A continuing major focus for us is the development of our new trading platform. Many of you know our current platform is supported by NASDAQ OMX, but a major project on our side currently is the development of a new trading platform with our parent company, Eurex and Deutsche Börse. We hope to roll that platform out sometime in 2011. But one of the things that I wanted to point out is that we have certainly not stopped working with NASDAQ OMX. We have not stopped improving and enhancing our current platform. And there are many enhancements that we introduced last year. I won't bother going through all of them. We continue to plan for future enhancements up until the very end and the launch of the new platform. Another major industry topic, of course, is regulatory reform. We felt it was important for the ISE to add our perspective to the debate. We published a paper in late March where we expressed our opinion and the objective to create a comprehensive regulatory framework and the creation of a new Financial Markets Commission that oversees all U.S. markets on the equity, the futures, basically all financial markets. We believe that the framework should be risk-based, which would allow the regulators to really focus their attention on areas of the market that pose the greatest risk to the financial system. The proposal is available on our website, and obviously you can talk to any of our IC representatives at the conference. Thank you very much. I'd like to introduce Tom Whitman from NASDAQ OMX Philex.
So as I walked up to the podium following the ISE and Boris opened with his product announcement, it made me think of the Philly Exchange, NASDAQ OMX Philly, who never had premium product fees. So it's nice to see them following our lead in that area and give the customers a break for the last couple of years, saving them millions of dollars. Last year, as we stood up here and gave our update, Philex was a standalone exchange in the middle of trying to close the acquisition, or NASDAQ closing the acquisition of Philex, and the deal did close a few months later in the end of July. Since that time, we've been extremely busy in Philadelphia with a lot of changes and getting used to a new company and a public company. I've had a lot of people ask me, Tom, are you closing the trading floor? And we are absolutely not closing the trading floor. We made some changes physically to the floor to bring the floor brokers and the market makers and specialists closer together because there was a lot of dead space on the floor. We're touching it up a bit, but the floor is alive and well. We have no plans to eliminate that, so I just wanted to let everybody know that. We've done a lot of reorganization with the technology group and office space in the building, so we are on the 2nd and 8th floor on Market Street side, so if any of you want to come visit us, please come and do that. We are still in Philadelphia, although our data centers will move, and I'll let you know a little bit about that in a few minutes. The major effort has been a rewrite, like NYC had a rewrite for Amex, and Boris talked about their rewrite. It's a major undertaking, and some people ask Tom why you're rewriting a Philly system that seemed to work so well. Our Philly system was written on a proprietary hardware and operating system platform, which is not a good position for us to be in, although it's very reliable and very fast. We want to move to a platform that's more of a commodity-based platform where we can buy high-end servers at cheap prices. The iNet architecture is one that we're using as a framework to build our new platform on. One of the many things that iNet does for us is it gives us extreme scalability, and it already has architected into it the dual data center aspects of running the business, where the Philly system was a fault-tolerant platform that resided at Market Street. And these systems will be co-located in North Jersey, and the backup data center will be located also somewhere on the East Coast. The other thing that'll do for us is make what we do for derivative trading in the iNet platform for the use of Philly, which we're calling Philly XL2, will make it reusable for other areas of the business. I'll get into a little bit of a NOM update, but there are areas like our quoting interfaces that our members have asked, can we quote into NOM like we bulk quote into Philly? And we're going to take a piece of that and move it over to NOM to allow that to happen, so it'll be easy for those members to do that. While we're going through this rewrite, we took a look at, from a business perspective, not just porting, quote-unquote, the business functionality, but let's take a look at the couple areas that we weren't real happy with. The first area was the opening process. And when we get large order imbalances, there are times where the quality of the execution for large imbalances isn't exactly what our customers would like to see. So we're going to do a couple of things. Liquidity providers will have the ability to layer in bids and offers. We will also give the liquidity providers order imbalance messages so they know where the imbalance lies. We will also establish an opening quote range, which we believe to be the best price coming out of the auction. And we'll utilize, if other exchanges have opened before us, we'll utilize their bids and offers to access liquidity. So I think we'll see that it's a lot better opening process in Philly when we roll this system out. We will also roll out some new order types, some that exist in the cash market today. The find order, which is really the way an order behaves today in Philly, we'll have a search order. A search order will continuously seek the best bidder offer. It'll almost be like an internal smart router for those firms who want to come in and have us go and sweep other markets. We'll also have a do not route order. It's exactly that. It'll come in, it won't route, and we will reprice that limit order or market order up as the market moves away, but we will not lock the other market, and we will not go lower than the current limit price, so we'll offer that to order flow providers. For routing, we'll move away from the linkage hub, and we will use NASDAQ's NOS router to access other market centers. And this will be a big advantage and uptick for our specialists right now, where they are carrying the burden of some of the expenses that are incurred when we link away to take exchanges or any other fees out there from other exchanges. We'll pass those fees on to the end customer, and it'll be a very low transaction cost between Philly and NOS to get this done. So we think it'll be a big uptick for our specialists. We expect this rollout to occur in late May. The filing has been noticed by the SEC. We are in the middle of testing, and I spend a lot of time looking at the system and testing the system, so we expect this to happen later on next month. If we switch to NOM, the other market model that we have, which is price time make take, this system has been up for around a year now. Market share has grown from 1.7% to 3% this first quarter of 2009. The greatest share in the products of the ETFs and the greatest share that we have trading on this platform is in spiders, which is probably no surprise. It seems to be a popular one to trade in the make-take environment. We are continuing to evaluate pricing strategies and the cause and effect of pricing strategies. So we'll continue to do that and see what best works for both the ETFs and the indexes as well as other options. In closing, I'd like to thank all the customers, liquidity providers, and the brokers that have supported us through the transition from PHLX to NASDAQ OMX PHLX, and we hope to continue the quality of customer service that we have and look forward to moving to this new system and having a great experience for you. That's all I have. I'd like to, at this time, introduce Paul Finnegan of NYSE.
Hello, everyone. A couple of things. Thank you, Tom. I also wanted to take a moment and thank OIC and the Box for hosting the event. And Alan, I really appreciate you having me go last because I have an hour and a half to talk. But I know being the last speaker sometimes is sort of the roughest because most people, our heads are bobbing to the church music, and I am the only thing that stands between you and the cocktails. So I'll make this, two things I'll abide by. I'll try to speak up, loud and clear, and I'm going to try to get back to my seat as soon as possible. Just a couple of things. I thought what I'd try to do is give a brief background. This is sort of similar to what we did last year at the last conference, but what I'll try to do is to give you a brief overview of NYSE and the ARCA and Amex options group and where we're at and where we plan on going. I thought it'd be a good idea just to basically to give you a quick background on NYSE in general, because I get asked a lot of questions like, hey, Paul, what's NYSE composed of? Which exchanges do you guys own? Basically, we've come a long way since 1792. Our core assets evolve around basically 7 cash exchanges, 2 options exchanges, 2 futures exchanges, OTC clearing, NYSE technology, and our global listing business. Just to go through a couple of the highlights year to date. We finalized, as I think it was Carolyn that mentioned about the OCC clearing. So right now, you can, if you trade NYSE Life metals products, the gold and silver contracts, those are cleared on OCC, and that was completed on April 2nd. On March 2nd, we completed the Amex options transition to the new trading floor at NYSE. On February 26th, we signed an MOU with the Shanghai Stock Exchange, the Dalian Commodity Exchange, the Shenzhou Commodity Exchange. So we're basically working now with all 3 exchanges on the market development of those marketplaces as well. In 2008, we had commercial partnerships were established with the Doha securities market. I have to read this because I can't remember all of them. The BMNF Bovespa, the Bursa Malaysia, the Philippine Stock Exchange, the Tokyo Stock Exchange. And I want to take just 15 seconds and thank Mary Savoy and Gina McFadden because, as Mary had mentioned in her presentation, the TSE, the Tokyo Stock Exchange, and OIC did a number of seminars in Japan, and NYSE was involved in those, and they did a terrific job. I mean, every city that we were in, we had probably in excess of 300 to 400 people. So we really had a great turnout, and it just sort of gives testament of what the OIC has done on an international level, on the educational levels. So thank you. Options. Look, I can't stand up on this podium. It's intimidating to speak in front of this audience because, coming from an exchange perspective, I can't tell our clients, how to trade or which way the best exchange is going to go to make, you money. But what I can do is just to sort of give a brief overview of our two market models, and most of you, if not all of you, are probably familiar with them. We have the ARCA options, which is the God, I'm thinking of the signs, Boris, last night. Boris has thrown me off guard because our signs at our cocktail party reception last night were wrong, so you've caught me again. But anyways, make a long story short, we have, bear with me here, the market structures, the price-time priority on the ARCA options and customer pro rata on the Amex. Speaking of the Amex, the NYSE closed on the transaction on October 1st, and within 5 months, we moved the entire transition over to the new trading floor and onto the ARCA technology. So within 5 months, we were able to transition almost the entire old Amex model over to NYSE and onto the ARCA technology. So with both exchanges, we now have leading-edge ARCA technology. We have a simplistic trading permit structure, so there's no bins, there's no seats, there's trading permits. And you need 4 trading permits to trade all the issues on ARCA, and you need 4 trading permits to trade all of the issues on Amex. And if you wanted to quote all of the issues on Amex, the barrier to entry is very, very low to participate on the Amex options side. Each ATP costs $1,000. So for $4,000, you can quote all of the issues across the board on the Amex options exchange. We offer a range of sophisticated order types on both exchange. We have co-location capabilities on both exchange. We have unlimited bandwidth on both exchanges. Right now, we're capable of handling 250,000 orders per second and 1.5 million quotes per second, and there's no cancellation fees. In the first quarter of 2009, our average daily volume was 2.3 million contracts. That's as a combined entity. Moving forward, I just wrote down a couple of my own notes to say, where Paul thinks or what's the main points going on in the industry right now. And I actually think that, and I'm not going to say that no one else knows this, but we definitely are at a crossroads within this industry. If you consider the hidden liquidity, the regulatory environment, the impact of additions of the penny pilot program, the entrance of new exchanges, the growing presence of the high-frequency algo clients, which now represents, this is a number that I have seen, 60% of the average daily volume in U.S. equities, and that number is increasing on the options side, as many of you are aware of. The growing threat or loss of the traditional players that used to be in our market, the growing demand of IT infrastructure, the competitive consolidated retail landscape, and the counterparty risk. So, the audience should be asking the exchanges, what are you doing to address those things? So basically, a couple of things that are on our, playing field and things that we think that we can, help the industry get through some of these competitive issues and get through some of the challenges is from a ARCA options and an Amex options, just this week, we improved our sponsored access gateway controls for both exchanges. We'll be rolling out new order types over the next couple of months. We're expanding or will be expanding our complex order book that's currently on ARCA to Amex. I've spoken about UTP before in the past. UTP is our universal trading platform. Tom had mentioned, the infrastructure that goes into connecting to all of these exchanges. And if you look at the list that I outlined earlier, basically what UTP is, you're going to only have to write to one gateway, and you're going to have a common customer gateway to all exchanges, all products through NYSE. Okay, NYSE Technologies, I just wanted to hit upon that for 1 second, is our commercial technology business. The business provides the investment community with leading electronic trading this is my sales spiel right now. the leading electronic trading technology for liquidity center connectivity, trading applications, exchange solutions, market data content and management, and low-latency trade messaging. One of the largest projects that NYSE Technologies is doing right now is we're building a 400,000 square foot building situated on 28 acres, 34 miles from Wall Street. So basically, we're going to have this major co-location resource capability, and all of the co-location centers now are going to be moving into that particular location when we're done. So you can see the benefit that that's going to provide from some of the comments that some of the other speakers had made. The only other thing that I wanted to mention about, like moving forward, we just introduced a FIP program. It's our Futures Incentive Program on April 1st, and what that is, it's a new initiative on the pricing side where if you trade our metals products and you trade the ETFs on the equity side on ARCA, you will be given a rebate back on that. So you can see where the direction of all of these different exchanges are going and where the direction on some of the pricing is going on the industry. It's not going to be just one exchange, even though I know there's regulatory hurdles that, come up. But in this particular instance, we're going to be looking at a client's, overall volume across all of the sister companies under the NYSE umbrella. I'd just like to sincerely thank all of our customers for their business. And if you have any questions, feel free to stop over at our booth throughout the next couple of days. And I'd like to say thank you. And Alan, it's all yours.
Well, the good news is we finished well ahead of schedule, but the bad news is we're still a good hour and 25 minutes away from opening cocktails in the exhibitor hall. That will take place at 5:30, directly across and outside of this exit here is the exhibitor hall. That'll be followed by the welcome reception and dinner, which begins at 7. So I guess in the meantime, you can either go back to the pool or plot your next wardrobe change for later this evening. Thank you again for attending the session update, and we'll see you later at the vendor booths.
And that's going to do it for this episode of Options Insider Radio. Be sure to visit www.theoptionsinsider.com for more episodes of this program, as well as breaking news from the options market, the latest articles and analysis from options experts, a wide variety of options education, and of course our discussion center where you can share your questions, comments, and insights with your fellow Options Insider users. While you're there, be sure to register for our monthly email newsletter, as well as our free email alert system. Our email alert system makes it even easier to stay up to date on the latest content from theoptionsinsider.com. Thanks again for listening. My name is Mark Longo, and I'll see you next time on Options Insider Radio.
Options Insider Radio was created by Mark Longo and produced by Gene Crotty. Options Insider Radio is a production of the Options Insider Incorporated, all rights reserved.